Well, official good morning again to you all. We are pleased to welcome you to our first Learning Zoom. This morning, our topic, our theme is finishing well. We are looking at some creative and helpful ways to talk about year-end giving for our local churches, for our pastors, and for our lay folks. And we are very pleased to have with us this morning Dr. Fred Houston. I know Dr. Houston from Conway First United Methodist Church. If anyone has ever tuned into the contemporary service at Conway First United Methodist, you have seen Fred behind the keyboard. Yeah. So that is his other spiritual gift of playing. I think it's not just the piano, but playing
4 keyboards.
Okay, playing 4 keyboards, and he can play them all at once. So be sure to tune into be sure to tune into worship to see that happen. But Fred is a member with his wife at First United Methodist Church in Conway. Dr. Houston has been serving and consulting in the nonprofit sector as a professional fundraising executive since 1984. He holds a doctorate in educational management and development. Initially began his career as assistant vice president, followed by executive director of development at New Mexico State University. He has a very long bio. He's told me to keep it brief, but helping churches to be good stewards with their resources and helping lay folks see how they can
not get my headphones.
Their congregations and be good stewards of their resources is his passion. And so we are excited to have you and grateful to learn from you and with you. I'll say he has shared that we can keep this, we will keep this casual this morning. And so if you have a question, feel free to interrupt, to chime in, to ask your question. We will also have a time of Q&A following his presentation. So if you want to ask a question, a pressing question during, feel free to do so, but also know we'll have time at the end of the presentation for Q&A. As I turn it over to Fred, I'm also going to share his presentation. So I'm going to mute everyone, but again, feel free to unmute if you have a question. Oh, I'm not going to mute our video. I'm going to mute everybody. Someone remind me how to do that. I know that I can do that. Katie, remind me how to do it. How do I mute everybody? Are you all, you have all muted yourselves. So thank y'all so much. Actually, I see one. There we go. I've muted everybody. So now I'm going to share. Okay, we had a chat. I'm going to share the screen and hand it over to Dr. Houston.
Very good. All righty. Is there a way I can see everybody, or do we have to do that first?
I can do. Would you like me to do this right here?
Yeah, that's good. So, well, good morning, everybody. Thank you. Thanks so much for joining with me today, and Lynn and Amy and the staff here at the foundation office. I'm grateful for the opportunity to be here and honored, actually. They asked me to do this in September, and I couldn't do September or November, so or I'm sorry, October. So November is it, and it's timely, as we have, believe it or not, as they say, 59 days left to the year 2023. So it's appropriate to be talking all things about year-end giving and activities, and planned giving as well, Lynn. So very timely. So I was driving down this morning and listening to NPR radio, and I tune in. I always like to get the news at the top of the hour. And this morning, the news was brought to all of us in the UALR listening area by the charitable bequest of Joan Kroc. So Joan Kroc, as several of you may know, was the wife to Ray Kroc, who was the McDonald's creator. So Joan Kroc left two of the largest charitable bequests in the history of the United States at her passing. NPR received a $200 million charitable bequest from her estate. And our friends in the Salvation Army received $1.5 billion. And that represents the largest charitable bequest ever given to a nonprofit organization to date. So it's very timely to be talking about not only charitable giving, but planned giving as well. So a disclaimer for everybody. I'm a Methodist of some 20 years, but I am not a CPA nor an attorney. So the ideas that I'm sharing with you come from a little over 39 years of working with folks in churches and sitting at the what I call the kitchen table discussion, and just sharing ideas about charitable gift planning and what can be done. I've directed a lot of people to and taken them to meet with CPAs and attorneys, not only here in Arkansas, but I began my career, as Lynn shared, in 1984 at New Mexico State University in Las Cruces, New Mexico, where I had received my graduate degree. So traveled all across the United States with our firm, visiting with folks and just sharing with them ideas and suggestions for moving forward with timely gifts, as we're talking about right now. So couple of things I want to share with you, a couple of ideas that we can go to, Lynn, with the slideshow. Is that me now? Okay, all right, very good. So I will start here, and usually I have a much lengthier quiz I would give you, Katie, to respond to quickly. And Kathy and Amy took the quiz the other day. They said they knew all the answers. I'm not going to go through that in this brief 20 minutes, but I want to show to you the importance of what we're involved with. So all of us read the Declaration of Independence, I'm sure, when we were in our civics class. Katie's nodding, I see that. So 1,300 words created this wonderful document that says who we are and what we're about here in the United States. The Constitution of the United States, drafted shortly thereafter, it contains 5,000 words. I've read that maybe once or twice. I'm not sure, Charlie. CE. So our Holy Bible has 773,000 words. And then our federal income tax code, 1 million words and rising. And I say and rising because January 1st of each year, of course, is when many of these new tax laws come into effect. And I went back about 13 years to 2010, and the combined increase, not only in the federal income tax code, but state income tax code as well, had for state and federal, those two tax documents increased by 41,000 new taxes.
Oh my gosh.
And legislation surrounding taxation. So when you meet with your CPA or your accountant, we need to give them a hug, because by golly, I don't know how they do it. I have no idea how they can get through all of this and maintain sanity at the same time. So we're going to cover several different types of different ideas and suggestions for not only year-end giving, but ways to attract giving from, of course, our churches, church members, and community as well. And one of them, the Methodist Foundation here has already participated in this year. It's called the IRA Charitable Rollover. And from a show of hands, can folks raise their hand? Anybody know what that's about? Have you heard of that at all? So, okay, Clarence has, of course. So that's a really unique piece of legislation that actually came out in 2006 is when that began. And those of us in the plan giving arena had petitioned our state legislatures, and our national congressmen and women and senators to permit a portion of one's IRA that we have saved and saved for over time, to take a portion of those monies, of the interest income that's earned there annually, and direct it towards our church or charities of our choosing. That first began in 2006. Became very popular, and the reason it became very popular, as of today, there's $11 trillion in IRAs, traditional IRAs in the United States right now, $11 trillion. And so in 2006, the federal government said, that's probably a pretty good idea. We should be able to let folks take the monies if they don't need them for their own expenditures and welfare, go ahead and give them directly to charity. What was different about that, and is to today, is the fact that with the IRA charitable rollover, the federal government doesn't want us, the folks that are taking distributions from there, to physically touch the assets, Lynn, and not the income. So in October of each year, that's traditionally when financial advisors will let their folks of the age of, it used to be 70 and a half years of age when it first came out, but it's now increased up until 72 and a half years of age, and permits them now to direct. They're not taking their deduction or their monies out, but they're directing the monies to go to the church, Methodist Foundation, charities of their choosing. It's kind of a pass-through, actually. It's directed by letter. You must sign a letter saying, please give X amount of monies, and direct it towards the charity or the church or the foundation that I've listed herein. It's very significant. When it first came out, you were able to do an amount up to about $10,000. Talk about tax law changes at some point in the mid 2010 decade. This whole IRA charitable rollover deduction went away. It sunsetted. And everybody said, that's not right. This has worked so well, and so many charities and churches and foundations count on this. They brought it back. There was discussion of what the dollar amount that folks could transfer, and the federal government said, wait a second, we don't want you to be able to give a lot of your IRA distribution away without getting some taxes taken out of it. So they've limited it to $100,000 per year per individual, which is still quite substantial. So the IRA charitable rollover, it's a wonderful thing. A lot of folks I have seen and have worked with have used it, and they backdate like their pledges to church. They backdate their pledges to comprehensive campaigns, for instance. You can use it for those purposes all through that particular tax year. So the distribution will not come, of course, until the final quarter of the year. But
so when you say backdate, they may fulfill a pledge or fulfill their commitment to their church, but they're going to do it in one gift toward the end of the year. That's correct.
And you think about it like stewardship campaigns, things like that, where our church is counting on at least hopefully somebody making a signed commitment. So we need to have that in writing. And so the charitable IRA distribution is something that they can commit to, knowing in full advantage of taking part in it again later in the year by December 31st. It must be completed by then. So that's it's a wonderful benefit, and unbelievably so. There's so many folks that need to give monies away beyond they just don't need the income. So
now, Fred, in your opinion and your professional experience, do you think that should pastors be mentioning this in communication pieces? Should pastors be talking about it? Because a lot of lay folks know this is the way that they can fulfill their gift to the church or make an additional gift to the church? Do you think they know that it can apply to their church giving?
You know, the short answers to that, I would believe the answer would be no, Lynn. I'll be honest with you. I think that's the folks that are participating here today, your role, Amy's role, Wayne's roles, and sharing this information. I was over in Fort Smith last week speaking to their Association of Fundraising Professionals chapter there. And a Merrill Lynch executive came up and he heard this presentation. He said, Fred, I've got to tell you that you're speaking about having this completed by October or, you know, shortly thereafter. He said all but 6% of my client base has already done this.
Okay.
And that was October 26th.
Wow. Okay.
So in years past, and even when I shared with the foundation here, to do a mailing, we typically do a mailing on this, folks, by October 1st. I say October 10th is when the distribution letters go out from the financial advisors. Our donor base, if you will, is perhaps outside of the church, but within inside the church is so well in tune to this right now that they know to anticipate this coming into, I would say, right after Labor Day.
Okay.
So, so for our folks that are with the churches, our pastors here, I'm going to give you an idea about talking about wills in the states in a moment, but the sooner the better is at the end of all this. And it was interesting that the Merrill Lynch executive approached me confidentially, said, Fred, back it up. He said, they know it's coming now. And I'll share with all of you, when I was doing this during when I was out of West Texas A&M, during their plan giving for 9 years, and that started in 2012. We used to have people calling in and say, I know my distribution is, the time is coming up in October or thereafter, and that they wanted to know when it could be, when they could direct their monies. So we've done a really good job of telling people that. I think, unfortunately, our church congregations need to be educated earlier and ongoing, and that's the role of your work and Amy's and Wayne's. So that's a good one. Any questions about the IRA charitable rollover from anybody?
I can make their pictures bigger for you.
Yeah.
I have a question.
Yes, ma'am.
Can you designate your entire IRA, not just your distribution? I mean, my church won't get real excited because it's not millions of dollars, but I'm interested in designating the entire IRA.
You know, that's a question that I'm going to come back and say, you know, I don't know the exact answer to that. And here's the reason, and I will find that answer from an attorney, because I'm not an attorney, but Lynn will help me direct that answer to you very quickly later this week. At some point, as you well know, the monies that have gone into your IRA have gone into the IRA tax-free. So from just writing a check to that, or from a distribution from an employer or something of that nature. So at some point, the federal government is going to say, you know, we want to get our fair share of that IRA. So we have worked, I will share with you that we have worked legislatively. This I do know the answer to be able to directly have the corpus of the IRA, if you will, go directly to charity. I have not seen that take place yet. The distribution certainly, but not the principal or the corpus of that. I'll confirm that with an attorney and share the direct response with everybody later in the week. So yeah. So
thank you.
Yes, ma'am. Okay, so
Lynn,
sorry.
I believe we got a letter from Wayne a few weeks ago with information on that.
Mhm.
I got something from somewhere
Yeah.
about that. I just copied and pasted it in our newsletter,
Oh, that's fantastic. That was,
which I've done several times over the years. I haven't lately, but I just put our monthly newsletters a little bigger, so there was
yeah.
room to put that in.
Okay.
So Wayne drafted a form letter that gave language for pastors to use in local churches, encouraging them to consider the church for for the IRA role, for the
Right.
distribution. So we sent that a few weeks ago, and Bud, you did exactly what we hoped you would do. Just put your name and
Yep.
your church name on it and send it out as
Yeah.
your own. So thank you for doing. I'm glad you.
Yeah, but it's our understanding that you can make a charity the beneficiary of your IRA. Dr. Houston, you mentioned on the qualified charitable distribution, you mentioned that there's a limit of $100,000. A husband and wife could each make that $100,000.
That is correct. It's by the individual. That is correct. Yeah. Mhm. So it's a wonderful opportunity for charitable organizations, nonprofit organizations. So thank you for pointing that out. I appreciate that. So okay, we'll go on to this way. There we go. All right, we're going to talk about plan giving here, and I just wanted to talk to you as I look at this, Lynn. What's the most common type of plan gift given by individuals or couples without children to a nonprofit or a church or a foundation? And
Any guesses?
I'll
Yeah.
let anybody jump in here. Amy, you know the answer, so you're not allowed to jump in.
I would guess it would be A.
That is correct. Yeah, it is. Let's see. Oh, how do I? Okay, there we go. Bequest. Yep, it is bequest. And the most common type of plan gift given when you have children to nonprofits is a trust or unit trust. So we're going to talk about some of these. These are called life income gifts, and the one in particular I want to talk about is the charitable gift annuity. That's I'll come back to that in a minute. Okay, how do I keep
There we are.
All right. So
We
make this work for me, Lynn.
Yeah, we'll be glad to.
I'm trying to talk and look at that at the same time. So
Okay.
Charitable gift annuity is a very popular type of life income gift wherein the individual or the couple gives a gift to a nonprofit organization, 501c3 organization, what have you. And they say, hold on for a moment. I need to have some income off of this gift for a period of years, a term of years, or for life. And so 2 years ago, when we first met here with Amy and Lynn and Wayne and myself, we started talking about this gift annuity, and these have really taken off in a wonderful way for a number of reasons. The first is, and just a little history lesson on an annuity, believe it or not, is the oldest of the various types of retirement plans known to man. The annuity initially began in England in the late 1700s. It's how the churches set up retirement plans for their pastors, interestingly enough, in the late 1700s. So the annuity itself has been around for a long, long time. Now, it wasn't a charitable annuity because the pastor had to live on that after he finished his time in the pulpit. But the charitable gift annuity is a bit of a variation on that. So let's take this example and walk step through this if we can, Lynn. So let's say a donor wants to give a gift to the church, to the foundation here of $25,000. So they're going to designate that and say, as I said a bit earlier, hold on a second, I need monies coming back from myself and my spouse. And so we say, okay, so we'll set this up and put the monies in there, and then based upon their ages, they get a distribution from that in perpetuity, essentially, for their lives. So Lynn creatively put the name of Mrs. Susanna Wellesley up here. Wesley, so she's 70 years of age, and because of that age bracket, she receives a charitable income tax deduction in the year that she creates that. In this case, you can see it of $9,642. So, which is a wonderful gift, and something to talk about here. When you look at that income tax deduction amount, Mrs. Wesley may not need to use all of that income tax deduction in the year, Lynn and Amy, that she's given that gift. So the federal government says, you know, thank you so much for giving this gift to the church or to the foundation. We're going to let you carry this forward for a period of years. And the other type of life income gift permits you to do the same thing too. So you can carry it forward, not only to use it the first year if you need to apply that against any taxes, but you can carry it up to an additional 5 years after that. So that's kind of handy to know in terms of folks during their tax planning when January 1st comes around and they put that into their tax statement. So in Mrs. Wesley's case, she's going to receive an annuity payment of 5.9% because of her age. And if there's a spouse associated with Mrs. Wesley's, then she can, you know, that percentage varies. I will share with you, of course, the older that you are, the higher that percentage becomes. And so she knows that for the rest of her life, in this case, she's going to receive an annuity payment, typically quarterly. Lynn, maybe you may do that differently here, I don't know.
We provide quarterly,
Okay.
monthly,
Annually, okay, so all of the above.
biannual.
And obviously deposit electronically into their accounts, I'm assuming too, with Clarence's help. So now with the charitable gift annuity, one thing to keep in mind is folks, they really like these, quite frankly, as investment tools, not only as giving a charitable gift to their charities of choice. So we'll see folks do something that I call laddering, laddering. And that simply means that they'll have a CD that's rolling over, for instance, and Lynn, they'll come in here and maybe do a CGA, a charitable gift annuity with you now, and then maybe 18 months from now, they'll come back and have a second one. And the one question that we're always asked is, can we just combine that into this, you know, into one charitable gift annuity? The answer is no. The IRS does not permit you to add in any more monies to that gift annuity. So you take out a second annuity. I will share with you that I've had a gentleman and wife that had 18 charitable gift annuities given to one of our clients over a period of about 5.5 years, I would say. And they were CDs and bonds that or whatever were coming due, and he turned them into charitable gift annuities. What he really liked in terms of the laddering was that the annuity percentage, that 5.9%, always went up because he was aging. And so 5.9% then became 6.2%, and then as you might, 6.8%, so on and so forth, going forward. So at the end, of course, the Mount Methodist Foundation receives, when the person has passed, they receive the, pardon me, $12,500, what's remaining, the remaining monies in the annuity. And then that annuity is closed, obviously, at that point in time. The second thing that I really like about charitable gift annuities is the fact that in most instances, unlike a charitable remainder trust that we're going to speak to in a minute, the gift annuity is typically a 1 or 2 page document that's signed here and by that individual. And you don't have to have an attorney involved in that at all. There is a financial accounting that takes place within the foundation and for that donor, of course. But beyond that, There's no annual accounting as you have to do in a charitable trust that we'll talk about in a minute. You have to follow its own tax return, for instance, things like that. And then the setup. So the setup costs are zero on the gift annuity. So let's see, any questions about that? Let's
Have one. What if we kind of thinking, or what if we putting these two together, the IRA rollover and now the CGA, could a person in a local church, could they use their charitable rollover to take out a CGA?
They can direct it towards a gift annuity. Now, I will share with you that the distributions do have some limitations, and you cannot put them, for instance, into a donor advised fund, like at the community foundation here. So that limitation does exist, but they can direct their annual distribution, required minimum distribution, RMD, to the gift annuity. And once you're notified of that, and the funds actually come into the church or to the foundation, then you can sign the documentation for the annuity. So good question. Any other questions here at all? Great.
Direct their QCD to a charitable gift annuity. Let's say Susanna has done this. That was the source of her $25,000. So she directs her QCD to a gift annuity and gets a $9,642 income tax deduction.
She does not, interestingly enough, Clarence, that's a really good clarification, because what happens is the federal government gives her a deduction on when she takes the QCD. So it's not taxed as income. So you get one or the other, but not both. So she could get a charitable deduction if she took the monies out and came in with a check and said, Lynn, Clarence, I just got these monies from my IRA in October or November, and she hands you a check. That's a charitable deduction. If it's directed under her direction to you from the IRA, then she gets more. It's really a tax deduction, essentially, is what it becomes. It lowers her income amount so that she's paying less in taxes. So you can't have both, though. Federal government, we tried that. So didn't work. So, okay, next slide, please, if I've answered everybody's questions. So, yeah.
Move to the
Okay, so charitable remainder unit trust. And so a charitable remainder unit trust is in many similar ways very comparable to the charitable gift annuity. These were very popular some years ago, and believe it or not, there's a new interest in them right now. It is far more complicated. I will share that with all of you here today. A charitable remainder unit trust, number one, is more complicated. It is an actual trust document that's created, of course, through a gifted attorney. And so there are expenses involved with creating a charitable remainder unit trust. And then at the end of it, it has an annual reporting, Lynn, of its own trust, that you have to share with the federal government. So we'll do this example here. And this is a 2-life unit trust with Susanna and Samuel Wesley giving $100,000 to the United Methodist Foundation, the Methodist Foundation, if it got a new name for me. So this particular trust instrument, speaking of tax laws, was created in 1969. Believe it or not, it's never been modified since 1969, which is unheard of in federal tax law. It works that well. The federal law requires that 5% is the minimum that can be paid out to the folks that are creating the trust. I will share with all of you, the highest that I have done has been a 9% unit trust with a donor. And that was in the late 1990s, 1998, I believe we did that. And that was kind of stretching it a bit, but that's the percentage he wanted. And you can invade the principal on these if needed to pay that income. So it has a variety of uses that's a little bit different than the charitable gift annuity. What happens with the unit trust, and let's say it's a wonderful year in the stock market, so that $100,000 that the donors put into that initial funding for that unit trust then becomes $120,000 based upon the interest income earned during that tax year. Well, then the donors get 5%. The next tax year, the donors get 5% of the increase in value of the $100,000. So the income goes from 5,000 to 7,000, whatever it might be here. And the down part of that is, of course, if the stock market doesn't earn that minimum of 5 or 6% that's needed to pay this, then the nonprofit entity, the charitable entity, can enter into the principal and pull monies out, because you're required to pay that 5% distribution annually to Mr. and Mrs. Wesley. So that can come back a little bit, somewhat frightening sometimes, but over the course of the unit trust life, the term of years, and by the way, you can do this for a term of years. Some folks like to set these up for 20 years, for instance, and then the trust collapses. Principal goes to the charity and the foundation, and there's no additional income. That's one way you can set it up. A second way for life, of course, and you can have the monies come to the couple for their lives, and then when the second of the remaining spouses passes, then the principal comes to the foundation. The third way is you can defer the income, interestingly enough. So you can say, okay, I want to set up this charitable remainder unit trust with $100,000, and I'm to be receiving 5% income for the rest of my life, let's say. A lot of folks use this as a retirement vehicle. And so they're in their, let's say, their early 60s, and they know that they're going to retire at 66 years of age. They can say, let's defer my income coming off of this unit trust for another 6 years. Okay, so over that 6 years period, that 5% that the unit trust is earning goes back into principal. So 5%, or 10, whatever comes to, 105,000 and 110. So by that 6th year, if it were 6 wonderful years in the stock market, they may be getting 5% interest off of $140,000 or something like that. So that is the difference between the gift annuity, and you can have a deferred and gift annuity too. Have you all done any of those at all? Okay, yeah. So you can do both, but the difference is the impact of the percentage that they're guaranteed to receive, whether it's this year or in 5 or 6 years from now. So I want to add one more thing about this charitable remainder unit trust. I shared with Lynn and Amy and Wayne last week. I met with an attorney up in Conway, and we were talking about the tax law changes, of course, that have come off since COVID-19 and things. And the discussion of this charitable remainder unit trust came up, and he said, Fred, I hadn't done any of these prior to COVID for a long, long time. And then I'll share with all of you that I've not seen one done in maybe 7 or 8 years. He said since 2021, he's done 50 of these charitable remainder unit trusts in the past 2.5 years, basically. And I said, why is that? And he said, well, what folks are doing, and this is a really unique way to transfer wealth generationally. There's a trust that can be created. This is going to get very technical, but Clarence, maybe we can come out with some information with everybody on your e-newsletter. But simultaneously, while creating the charitable remainder unit trust, they can create what's called a crummy trust. Yes, it sounds like it's crummy. The crummy trust, CRUMMEY, comes alongside and permits essentially the monies that are to be some of the monies that are to be distributed from the interest income, you defer it to the Crummy Trust, and the Crummy Trust purchases second to die wealth replacement life insurance. A lot more boxes on this screen than what might come up here, but we're seeing a lot of families do this charitable remainder unit trust right now, with that in mind, that they're taking a proportion of the monies, and a lot of times, quite frankly, Lynn and Amy, it's monies that are not, you know, they say, well, we'll put, it's probably a higher dollar amount than 100,000, probably maybe a $500,000 amount into that. We don't really need the income right now, so let's buy life insurance to replace the $500,000, second to die life insurance. So at the time of death of the remaining spouse, the charity gets the monies, and the family members get the monies from the life insurance policy. So, so just again, a little bit more complicated, but it's interesting that attorneys are seeing more activity with that done right now. So, how are we doing on time, by the way, here? So
we have 10:48.
okay, so we're getting close. So just let's see, what do we have after that, Lynn? Well, this just talks about the charitable bequest population. And what's interesting, I'm a statistics guy, so as you look at what's up here, you can see age brackets of folks who do will planning. And this is what I wanted to talk to everybody about quickly in terms of will planning. The first is this, number one, we live, of course, as we all know, every day by listening to the news, NPR, that we are in very unique times. One thing we know about the times that we live in, that whatever the dollar amount is, we're living in what will be known as the most historic transfer of wealth ever to take place. So the studies that began back in 1998 suggested that there would be $41 trillion worth of wealth passed from, let's say, my parents' generation to the boomer generation. And whatever that dollar amount will be, it is an historic time in terms of the transfer of wealth in the United States. So to the point, today, there in the boomer generation, there are 51 million of us. I'm in that generation today. There's 51 million folks living that turned 65 and older. Our life expectancy is 12.4 more years. 76.4 years is the average life expectancy in the United States today for the folks of the boomer generation. So I always tell folks that we, to your point at the very beginning of this discussion, we need to be talking about planned giving in our churches, and to be encouraging that, simply because 20 and 15 and 20 and 25 years from now, there's going to be a void of charitable bequests. Because, for instance, I'm 66, my oldest son is 37. So even if he would have something in his will, a charitable bequest of any type, you know, there's going to be a 20 or 30 year gap after the boomers pass on, quite frankly, that charitable bequest giving will fall off. We just know it's going to be, because there won't be anybody living statistically on average after about 12 and a half years from now, moving forward. So I'm encouraging everybody, and especially in the churches, we do a program that's called Endowing Your Tithe. After all the campaigns that we do in our churches, we always end up with a planned giving program called Endow Your Tithe. And that encourages members of our congregation to go forward and have literature available, e-newsletters, however that goes out, seminars on that the foundation can provide, and have folks consider, okay, this is what we're tithing to the church. Let's set up an endowment now or through our will, through a bequest, or through a gift annuity. Well, annuity's coming to you, but it can be the same idea, to benefit our church when we're gone. So endowing your tithe is the particular program that I encourage that. We talk about creative Christmas gifts going forward, and one other idea that I've shared with Lynn and Amy and Wayne in the past is when we're talking about all these various types, whether it's a gift annuity or a bequest or adding a codicil to your will, I always encourage everybody to have literature or something in front of their, in this case, the congregation or your donors prior to Thanksgiving holiday. I call Thanksgiving the uncluttered holiday. I think we all can relate to that. So charitably, we know that more estate planning is done over the Thanksgiving holiday with families together than at any other time of the year. So I have my clients always, quite frankly, mail out a piece on bequest giving, wills planning, something of that nature, Katie, to get them to have literature, a tabletop piece, if you will, to have that in front of them over Thanksgiving. So that's the discussion. I will share with you personally, this topic is going to take place in the Houston family at Thanksgiving. My wife's folks, we moved them here from New Mexico 2 years ago, and we had them, they had to have their wills, of course, translated, if you will, to Arkansas law, as Lynn spoke to earlier. And so we've just completed that. I just completed that with my mother and father-in-law, who are 92 and 93 years of age, amazingly so. And they created a revocable living trust and some other documents. We're just completing all that right now. And for instance, I'll share with you, my wife's sister is flying in from Michigan the Saturday before Thanksgiving. We will be going through those documents with her after the day after Thanksgiving, just to talk through that, because they're 1,000 miles away. They know that this is taking place, but they haven't seen any of the documentation. So a very well-known family in Northwest Arkansas that we happen to shop at their stores way too much. We know, for instance, that that family gathers together over the Thanksgiving holiday at some very nice place, and they make all of their charitable gift decisions within the 3 generations of the family over the Thanksgiving holiday. And we know this because when you look into stock transfers beginning the first week of December and the second week of December, you'll see very large stock transfers from that family individually to their family foundation or to charities of their choosing. All of that takes place on the day after Thanksgiving in that family. So when I first moved here to Arkansas in 1992 with my family, we had learned about that, and have come to find out that indeed is true based upon the stock transfer. So 2 ideas just to share with you. So I would encourage you, of course, going forward, to have something on planned giving in your church e-newsletter, if you will, something like that, for just prior to Thanksgiving. The charitable gift annuity we discussed, Lynn and Amy and Wayne could be on call leading up to year end, December 31st. So that's always available. One other idea I wanted to share with everybody is something that we've come to in our family, and perhaps you have done that as well. That's simply this. We don't need anything else. I wore a tie today, and it's one of about 18 I have left. I hardly wear ties anymore, and I don't need another tie or another shirt. So what our family is doing this year, for instance, is giving a gift to a nonprofit or the church of their choosing, and giving that in the stocking at Christmas. So my son was in the Navy, and he and I used to run in those muddy buddy things, where you I don't know, what is it, 10K or whatever, and crawl on nets and things like that, which supported the Wounded Warriors Project, for instance. And so we'll be giving a gift in his honor to the wounded warriors as his gift
Mhm.
for Christmas. So just a creative way to share what we all have been blessed with. So I'll stop right there and first of all say thank you, but let's take questions if indeed there are any at this point. I'm amazed them with my information and totally
think so.
confused them.
I think
Totally
so.
confused them as well. So, but let me say thank you to everybody for all this. If you have questions that or clarifications, and I will clarify that one
Mhm.
with Lynn in terms of the IRA, but go ahead and direct them, and I'm happy to respond to any inquiries or questions you might have as well. But truly grateful for your time. Thank you for letting me start this series off.
Yes.
Coffee and conversation, cocoa and conversation, if you will. So that's great. And I'm grateful for your time in working with the Methodist Foundation. And one other thing, don't forget this $500. This is a neat thing. It's like a challenge grant, I
Mhm.
think. Lynn, I'll let you explain that to everybody.
Well,
while
sure,
we're in
sure.
discussion here too.
uh,
So.
We have a new estate planning program at the church, and I know that we may not often think estate planning or planned giving when we're thinking about year-end giving, but it's always as Fred said, seasonally, with it being the year-end, and what we've learned about Thanksgiving and conversations that are happening around family tables during that time is good to keep planned giving in front of us. We have an estate planning program at the foundation called Planning a Legacy, and we'd love to, I know as I look around the screen, we've brought it to some of your churches. We'd love to have the opportunity to share it with you and your church if we haven't yet. But one of the incentives that we have associated with our Planning a Legacy is the $500 coupon or voucher that if an individual opens an account at the foundation to benefit their local church, if they make an initial gift of $500, we'll contribute $500 to that fund when it's open, so that on day one, it grows from $500 to $1,000. We encourage individuals to open these now so that they can name that fund to receive their gift in their estate plan. Perhaps I wrote that down, endow your tithe, that the fund could be the fund that a family creates to endow their tithe for their church. So we're happy to talk about planning a legacy, and also happy to talk about a $500 incentive. Now, Clarence, I saw you unmuted. Did you have a question before I turn it over to Amy? Okay. All right. Well, if there are no other questions, I'll turn it over to Amy. Thank you.
Well, thank you, Dr. Houston, for sharing all of this today, and want to thank all of y'all for joining us. And as we mentioned at the beginning, this is the first and hopefully a long series. We've decided to start these series quarterly, and depending on how successful they are and how popular they are, we may do them more frequently. But our next one is going to be in February, and we're trying to do the first Thursday of the month, and that just happens to be February 1st. It'll be at 10 a.m. We haven't nailed down the exact topic. We've been brainstorming different topics, and some of the things that we're looking at sharing with y'all about donor advised funds, Development 101 for pastors, and Allison McElroy, who is up here in Rogers, and she'll be joining us and working with like how to thank donors and just kind of development work for pastors. Estate planning, endowment 101. So a lot of different things that we are wanting and excited to share with y'all. But if there are some things and some topics that y'all are interested in hearing about, learning more about, please let one of us know, because we'd be more than happy to look into that and see if we can set that up. But just so you know, the next one is in February, and there'll be more information about that. Lastly, as you know, the session today and all future sessions are recorded, and we are going to put that on our website. So if there's something you want to go back to, or if there's a future session you're unable to make, you can always go back and check that out. It's going to be under our ministries tab under leadership trainings where you can find it. So anyway, thank y'all again. Hope everyone has a fantastic day and a wonderful weekend, and hope it's starting to warm up down there. It's been really cold up here. So But we're looking for some good sun this weekend. So I think that's it. Thank y'all.
Thank you.
Yes.
Bye-bye.
Thank you, Fred. Thank you, friends. Y'all have a good day.
Thank you for arranging this.
Yes.